Hey everybody, Signet here with the Bullish Bears, and in this video I want to cover the kind of day that we had today and maybe sort of address some of the questions that we're seeing in the chat. The NASDAQ today is down into the close 5%, and we did rally up off of those lows. We were down 6%, I believe, but we did rally up at the very end. But how can we have trusted this trade? How could we have played this day? And how could we have validated and confirmed that it was still viable and that we could come in and get another bite of the apple and that there was still more to the move? That's what I was seeing in the chat today. These are very specific kind of days. These are the days that everybody thinks we're going to get until we actually get one. And then when we finally do get one, nobody trusts it, and then they don't trade it and they say, oh, look what I missed all day. So what are a couple things that we can do? And remember, through this entire discussion, it's always really easy to look back at the end of the day and point out how obvious it was that it was that kind of day. When it's unfolding, it's not so easy, right? Because these candles now already exist, but while they were being made, they were up and down and wild swings in all directions. So one of the things I want to point out is, where did we open? We opened gapped down. Now, generally speaking, when you have a market that opens gapped down in the indexes, and this entire discussion today is about the indexes, it's not about what Apple does or Facebook or something like that. We're talking the S&P and the NASDAQ, the Russell and the Dow, the indexes. Okay, so what happens when the indexes are gapped? Generally speaking, when we open, the first thing they attempt to do is close the gap. Now, what is the gap that we're closing? Or we had the closing price on the day before, way up here. And when the market opened the next morning, it was opening way down here. That is the gap. Generally speaking, when the indexes open gapped, they attempt to close the gap first before they do anything else. This morning, when we opened, the market ran farther away immediately. It didn't stop and ask questions. It didn't even try to go to the upside. It never went higher than the opening price from the very beginning. So that's check number one. The next thing we want to ask in this same scenario is, where are yesterday's pivot points? We know where the close was because we already had that. We know where that was because we had to know where that was to know if we gapped above it or below it. What else do we need? Well, yesterday's open is a very important value, and yesterday's low is a very important value. So we would want to know those. If we're looking at indexes from the futures, then we could add things like the Globex. What was the Globex high and what was the Globex low? Those are other pivot points we could add. If you're asking yourself, what's the Globex? I don't know what that is. Well, on Thinkorswim, there is the daytime, the regular trading hours, the RTH, and then there is anything that is not the RTH. So down at the bottom of my screen, you can see the time the market opens at 9:30 in the morning, and the screen has this darker blue to it. But before 9:30, before the market opened, it had this like lighter shaded gray value. So if it's a dark bluish, then that's regular trading hours. And if it's that lighter color, then that's not regular trading hours. Anything not regular trading hours is Globex. Globex is actually an acronym for something, but the easiest way to keep track of it is, are we within the RTH? Are we within the regular trading hours between 9:30 and 4 o'clock? If we're not in that, then we're no longer in the quote cash session or the RTH, then we are in Globex. We're sitting here looking at the ES market, and on the ES market, there are Globex pivot points. There's the Globex high, there's the Globex open, and the Globex low, which would have been way down here right before they open. So those are also things that are like a little bit of a tell, that kind of give us a clue or an idea about where we are as we're opening up. And again, the very first thing that a market wants to do is close that gap. And if it opens and immediately continues to go farther away from the gap close, that is a very important bit of information. It's widening the gap. We were already bearish, or we wouldn't have opened that low, and the bearishness continued through the morning. What's the next thing that we can look at? Notice that on this 5-minute time frame, there was no candles going the other direction until nearly 10:40 in the morning. That was the very first candle that we got that had a higher open than its close. So every one of these candles closed lower than the previous close. Every single one of them, from 9:30 in the morning all the way up until 10:35, not one candle closed higher than the previous close. That's another tell. Now, at any point in time, we could have had one, but we didn't, right? At what point would you decide, okay, I really think it's going down? And notice the candles were getting bigger and bigger. So we had the first initial burst. That was a pretty good sized candle. In the second candle, we touched the midpoint, but it never looks like we got beyond it by very much. And then we had that small candle close, and we had a good sized candle breakthrough. That candle's not too bad. That one got a little bit bigger. Looks like that one got a little bit bigger, and they kept just getting bigger and bigger until we finally got to a stall point around a major pivot. And even then, we almost got an opposite candle, but we didn't. And then it continued in the move all the way up until 11:40 or 10:40, and that's the very first time that we had an opposite candle color. Now, what if we look at that on a smaller time frame? In a smaller time frame, the trend actually starts to show up, right? Because to have a trend, you actually have to have highs and lows. You've got to have some pullback in the market. On that smaller time frame, we can see that there was profit taking along the way, and there were traders looking for opportunity, and there is actually a trend. But until we went to a small enough time frame to see it, we couldn't see that trend. We could only see these single candles on that single time frame. So what else do we have? When we're trading anything in the market, but especially the indexes, we want to look at other indexes. So here we've got the S&P next to the NASDAQ. The S&P also gapped down first thing in the morning, and it barely pulled up against that gapped down market before it continued to go to the downside. So now we've got two different indexes both moving in the same direction, right? So that's just another piece of the puzzle. I mentioned earlier about that first 5-minute candle. That first 5-minute candle is a very valuable tool. It's really useful and helpful to help you identify if we've even breached the midpoint, right? So here I measured that first 5-minute candle, and it's the purple line, maybe the pink line. We're going to make it a different color so it's a little easier to see. That's the midpoint of that candle. And you can see that we never even got above it. Okay, so in that first negative candle, that big drop to the downside, even in the next two candles, we never came back halfway through that very first candle. And then it was just a straight drop down and down, right? So what else can we do? We can look at more than one index. We can look at the other indexes, right? So we're looking at the NASDAQ, we're looking at the S&P. Well, what else can we do? We can bring in the other markets that are out there. What was going on in oil? Oil was dropping. Oil opens at a different time frame than our market, so we can't just look at the light and the dark. We got to actually look at, well, what time was it? There is 9:30, the doji candle, and then it just went red, and it fell with the market. So we had oil falling, we had the NASDAQ falling, and the S&P falling. What else was going on? Bitcoin. Bitcoin was falling the whole time. What about gold? Gold was falling the whole time. Notice how every single market we're looking at was falling. What about the bonds? Yep, the bonds were falling. So everything was falling. The only thing that wasn't falling is the dollar and the VIX. Right? So those were the only two inverse markets. And those actually being inverse helped even more. because if those inverse markets started to stall or slow down or look like they weren't going to continue to advance, that would give us a heads up. And with all of these markets all moving to the downside at the same time, that provides a bit of a heads up. It's a little unusual to see stocks and bonds moving in the same direction. And so when they continued to do that through the day, that was one more confirming signal that this thing was just headed down, that literally everything out there was being sold. These are the kind of things that we want to look at to validate, to help confirm our bias. Why do I have this belief that everything is still negative and that I can still come in and try to get another short? Or, on those days when it goes up, that you can still come in and get another long. How can we trust or validate that, yes, it's gone a long ways today, it fell a long ways, but there's still more room to the downside, and we should come in and maybe try to get another bite of the apple? Or, at the very least, that we can say everything is still really negative. I don't think I should try to trade to the upside. Because another thing that I seen today, and even I tried to call the bottom once today and it didn't work, and maybe twice. But I seen people saying, well, it's fallen a long way. There's no way it can fall anymore now. I'm going to go long here because we're just way oversold. That didn't work, right? That's not a good precursor for trying to call the bottoms and catch a falling knife. A lot of times that does work. We get those midday V-bottom reversals and they build a little base maybe and they run back up. But this isn't a typical day. We know it wasn't a typical day because we had bonds moving with stock, and we had Bitcoin, and we had oil, and we had everything moving to the downside with a very, very high degree of correlation. How high? Well, this is the NASDAQ 100 and this is the S&P. So if we were to go in and ask, well, how many names in the NASDAQ were falling today through the morning? If there's 100 names in there and the advance versus decline is sitting at 98, then we can say that there's a very, very great amount of companies falling to the downside, right? A lot of companies. But rather than using advance versus decline, how about we just go in and ask that question? How many names in the NASDAQ today were going to the upside? So there's the declining volume. We actually want issues. So we'll just keep scrolling through here and we'll look for NASDAQ declining issues or advancing issues, right? We could take either side. So let's go in and find the NASDAQ advancing issues right there. Now that's the Russell. NASDAQ 100 advancing issues. How many of those were advancing? 2. Well, in the earlier part of the day, how many were advancing? 8 out of 100. At 1.9 out of 100 names were advancing. That's all. Out of the entire 100 names in the NASDAQ. Well, what about the S&P? This is the advance versus decline in the S&P, and it was extremely correlated, right? That's why I have the label there, extremely correlated. So we had that confirming that there was no names really at all moving to the upside. And we know that if we are going to see an impact with names actually driving the market, they have to be important names, like names with a large market cap. Apple, Microsoft, Amazon, Tesla. It has to be one of the FANGs, right? And all of the FANGs were going down too. What about the market breadth? There's cumulative tick, and then there's tick. Where were the ticks at this morning? They were not only below zero, they were hitting minus 1,000 all morning long. In fact, while we did jump above the zero line a little bit here and there, we stayed almost predominantly below the zero line all the way past 11:30. One more confirming signal. Well, what about the cumulative tick? That thing stayed very tightly correlated. All of them combined together, just a straight shot to the downside at a 45-degree angle. Look at that, perfect symmetry from left to right. Every signal today pointed that this was negative and it wasn't getting better anytime soon. We did have a little bit of a fakery here. This is where I tried to call a bottom and buy a trade off the lows. It didn't work. I got ran over. I did it a few times. I had a couple of small bites, like what we call contrarian trades. I got a couple of those. Those worked good. But every time I tried to stick the move and actually hold it for a rally up, I just got ran over, right? But that at least was a trade based on a signal that says it looks like we're trying to get a rally up off of those lows. And again, it didn't work, right? But there were opportunities through the day where we were getting those rallies to the upside. Even here, for an example, and this is where we're looking at here when my mouse is actually synchronizing, it was this move up that we were trying to catch, and it was this run right here, right? That line that you see on my screen, that's Friday's close. So we were bouncing off of Friday's close and rallying to the upside. It's worth a shot. So we want to be able to quantify, validate, make statements that we can point to that's not just, well, I think it's sold and I think it's oversold, so maybe I should buy here. No, we don't want to trade that way, right? We want to be able to point to a signal, point to a device, and an idea, a concept, and say, this thing says we're completely sold and there's nothing going along out there. Nothing. If nothing in the entire marketplace is trying to go up, why do we want to try to go up? Just because it's fallen a long ways? Nah, that's not a good enough reason. So hopefully everybody, this offers you a little something. I do recommend that you go back and study these kind of days. Take the opportunity while this one is still fresh to look at it in multiple ways. Put your indicators on it. Put it on a tick chart. Put it on your favorite time frame. Look for any signals that you can see in here that would have told you to stay in the trade. Or if you had already gotten out, any signal that says that you could have gotten back in again for yet another trade. These are a little rare when it comes to the kind of days that are out there. If you're new to trading, you may think that these happen a lot because in the current market we've been getting, quite a few of these massive rally days, but they really are unusual. And the reason that we're seeing so many of them right now is just because volatility is just absolutely insane right now. And even though that volatility isn't quite being reflected in the VIX indexes, the candles themselves, the kind of days that we're seeing, tell us that we're in a high volatility marketplace. All right, so take this opportunity while the chart is still fresh to go back and review it. Think about how you would want to trade a day like this, because these are very specific, unique kind of days, right? So here is a rising wedge. It's a very simple pattern. If I say rising wedge, you would say, oh yeah, no, I've heard of that. I know what a rising wedge is. I can Google it and I can see it. Well, what do we call one of these days? Because one of these days is a very, very specific kind of day. It's really unique. And when you see it again, and you will see it again, we want to make sure that you can recognize it and not mistake it for one of those V-bottom days where we run until lunch in one direction and then we turn around and run back up the other way, right? Or that we get that fake out breakout in the first 30 minutes and then it runs against us the rest of the day. These are very unique days. And they're so unique, they're a pattern or a shape, just like a flag, a cup and handle, a rising wedge. They're just like those. They just don't have a famous name yet. I appreciate your time, guys. Look forward to seeing you at the next video.